Hello, fellow traders. Welcome back to the Higher Timeframe Scalper, your go-to source for simplifying the complexities of the Forex market. Today, we're immersing ourselves in the world of non-farm payrolls, NFP, and its profound impact on shaping the broader dynamics of the trading week, with a keen focus on the EUR-USD pair. Non-farm payrolls, NFP, is a key economic indicator released by the U.S. Bureau of Labor Statistics regularly on the first Friday of each month. It represents the total number of paid workers, excluding farm employees, government employees, private household employees, and employees of nonprofit organizations. The NFP report is closely watched by traders and investors because it provides insights into the overall health of the U.S. labor market. A strong NFP number is generally interpreted as a positive sign for the economy, indicating job growth and potential economic expansion. Conversely, a weak NFP number may suggest economic challenges and could lead to concerns about a slowdown. The impact on the Forex market is significant because it influences market expectations for future interest rates. Positive NFP results may lead to expectations of higher interest rates to curb potential inflation, strengthening the U.S. dollar. Conversely, weak NFP figures might be seen as a reason for maintaining or lowering interest rates, potentially weakening the U.S. dollar. In summary, the non-farm payrolls report is a crucial economic indicator that provides valuable insights into the U.S. labor market, affecting market sentiment and influencing currency movements in the Forex market. When we discuss NFP, envision it as the pulsating heartbeat that reverberates throughout the entire week. The decisions made during this critical release act as the orchestrator, setting the tone for the subsequent days. In this video, our exploration extends beyond the specificities of NFP as we delve into essential inner circle trader ICT concepts. Before we plunge into the details, let's remind ourselves that the information shared here is intended for study purposes only. Consider it your analytical guide rather than an immediate call to action. Think of it as assembling your toolkit for deciphering market dynamics. As we journey through the realm of smart money and institutional order flow, imagine gaining access to the inner circle of traders who possess an intimate understanding of these market intricacies. Keep in mind that absorbing this knowledge is a gradual process, akin to constructing your trading playbook. Observe, take notes, and apply, all within the controlled environment of a simulated or demo setting. Traders, gear up for an enlightening expedition into the broader impacts of NFP, with a special focus on its influence on the EUR-USD pair. This video aims to equip you with insights that transcend immediate reactions, fostering a deeper understanding to navigate the challenges of the trading week. Remember, it's not just about the momentary moves. It's about grasping the bigger picture and leveraging that wisdom for study purposes. Let's embark on this journey into the world of NFP with a spotlight on EUR-USD. Let's take a leisurely stroll through our euro analysis, beginning with a friendly exploration of the 4-hour time frame. Picture this. Back on February 2nd, the market decided to take a bearish detour, setting a different tone for our euro journey. Since then, things have been in a bit of a huddle, like a group of friends deciding where to go next. As we're embarking on a comprehensive top-down analysis, My preferred starting point involves a deliberate exploration of the 4-hour time frame. This initial foray allows us to immerse ourselves in recent market developments, enabling us to absorb the nuances and intricacies that have recently unfolded. By gracefully traversing through the 4-hour horizon, we lay the foundation for a more profound understanding of the current landscape before venturing into the broader time frames. As we gaze upon the expansive canvas of the monthly chart, we observe a scenario where the price has found itself entangled in a period of consolidation over the past several months. This consolidation phase adds a layer of complexity, making predictions a bit challenging. However, amidst this intricate dance of price movements, there's a noteworthy element to consider: the premium array level, specifically characterized by the monthly mitigation block. It's like a key puzzle piece that catches our attention. The recent break of market structure carries a bearish tone, notably affecting multiple monthly swing lows. Additionally, there's a discount array fair value gap in the monthly that remains untouched. This fair value gap serves as a potential clue, suggesting a bearish inclination until the market decides to revisit and fill this void. It's akin to a puzzle piece missing from the overall picture, indicating that there might be a journey ahead towards this fair value gap on a monthly basis. So, in the grand narrative of the monthly chart, while the consolidation paints a complex picture, the presence of the premium array level, the break of structure, and the unvisited fair value gap provide hints that the market may lean towards a bearish trajectory until it decides to explore and reconcile this missing piece in the fair value puzzle. Shifting our focus to the weekly chart, it's crucial to keep in mind that ideas brewing on the monthly chart often unfold at a more leisurely pace. While the monthly outlook may lean towards a bearish tone, it's essential to acknowledge that the lower time frames can present a different narrative with potential bullish movements. As we zoom into the weekly perspective, the recent weeks have been marked by a discernible bearish tone, particularly evident as the market took on multiple swing highs. Following the principles shared by ICT about avoiding the pursuit of picking tops and bottoms, our attention is drawn towards seeking a continuation, at least towards the bullish order block situated around the 1.0600 level. This strategic approach recognizes the potential for shorter-term fluctuations, acknowledging that the market may showcase bullish tendencies in the lower timeframes even amidst an overarching bearish sentiment on the monthly chart. As we navigate this interplay between different timeframes, we're actively adjusting our strategy to align with the evolving dynamics of the market. Now, turning our attention to the daily chart, a recent string of bullish days catches our eye. Despite this positive momentum, the analysis leans towards anticipating continued bearishness, aiming to target the weekly swing low at 1.06949. Beyond this, the strategy involves repricing the daily fair value gap, situated at 1.06144. It's essential to highlight that the presence of the weekly bullish order block in proximity to the level of the daily fair value gap enhances the reliability of this as a short-term target. This strategic alignment considers both the shorter-term bullish days observed on the daily chart and the overarching bearish sentiment identified in the higher timeframes analysis. As we navigate these intricacies, the interplay between daily and weekly dynamics guides our approach towards refining potential short-term targets. Returning to the 4-hour chart, which serves as the first executable timeframe for short-term trades. We designate 1.08975 as an intermediate-term high due to its displacement characteristics. However, it's crucial to emphasize that the following tips do not serve as immediate trade signals. The expectation is for the price to, at the very least, trigger stops at the 1.08658 daily swing high, portraying it as manipulation before experiencing a downward surge. It's pertinent to note that this movement could also extend to touch the weekly swing high 1.08883, targeting at least the internal sell-side liquidity at 1.07958. According to the ICT protocol for NFP week, to not enter new trades post-Wednesday morning session or during the London kill zone. Additionally, it's imperative to recognize that the biased bearish movement can occur on Monday, Tuesday, Wednesday, with NFP exhibiting subdued activity, and vice versa. As we wrap up this insightful journey through the various timeframes and intricate dynamics of the Euro's market, it's crucial to stress the importance of using the information shared here for studying purposes only. Remember, trading involves inherent risks, and responsible decision-making is key. If you found value in this analysis, don't forget to give it a thumbs up. Share your thoughts and insights in the comments below, share it with fellow traders, and subscribe to stay tuned for more in-depth explorations. Your engagement helps build a community of informed traders, navigating the complexities of the market together. Always trade responsibly, stay informed, and keep honing your skills. Until next time, happy studying and safe trading.